If you have a mortgage that's coming up for renewal in 2024, you need to start planning ahead and looking into that now so that you're not surprised at whatever your new monthly payment is going to be, because rates have gone up, so your monthly payment is also going to go up. So I brought in one of my local mortgage professionals, Tina Robbins, to just answer some frequently asked questions and give a little bit of advice. So Tina, thanks for joining me. Let's jump right into it. One of the first things that I want to ask you about is true or false. People should automatically renew with whatever rate the bank that they are with now gives them.
False. People who have a mortgage coming up for renewal should reach out to a broker and let that person investigate other options that could be available for that client. Through a broker, you have the option to look at different types of lenders outside of the big banks. Some of these other lenders don't have storefronts, so they have savings that they pass on to their clients, and there may be opportunity for more comfortable payments and better interest rates.
Yeah, so what I'm hearing is don't automatically jump at whatever the first rate is given to you.
Definitely not.
Get a second opinion and dig deeper. There's opportunity to probably get a better rate than that first thing that's offered to you, right? So next question. Everyone is concerned with the rate. Like, that's often the only thing people think about is what is the interest rate that I'm going to pay. But I think there's other things that are important. So can you just speak to what you recommend people look for aside from just the interest rate in terms of terms and such that are offered?
For sure. Rate is very important, but you also want to understand what the terms and conditions of your mortgage is, and thinking about what your future goals are as well as your immediate needs. You want to make sure that you can port your mortgage to another property if you were going to sell. What are your prepayment options? How is a penalty calculated if you ever needed to leave that mortgage ahead of time? Some lenders have a clause inside of a mortgage where you cannot break that term unless you're selling a property to a non-related family member. So you really want to make sure that you're understanding all of the terms and conditions of your mortgage so that you come out with a good rate, a comfortable payment that suits your needs now and in future.
Perfect. And we're going to come back to the mortgage penalty thing in a little bit, so stick around because that's an interesting topic that I want to touch on. But I'll switch over to myself. So I have a mortgage that's coming up for renewal end of the summer, and obviously I'm hoping that rates come down a little bit before then. But if I had to renew right now, I would probably, because there's a lot of talk of rates coming down in the next little bit, which who knows what's going to happen. But I would be tempted to take a variable if I was renewing now. And again, this isn't financial advice, but I would be tempted to take a variable rate in hopes that I can lock in down the road at a lower rate, say maybe 6 months to a year, as opposed to locking in for 5 years at whatever the rate is. Or I would maybe look at a 1 year or 3 year. Can you maybe elaborate on, any suggestions you would have?
So people who have renewals coming up, there are a lot of people feeling the same way that you do. They're not necessarily wanting to lock into a 5-year fixed rate right now because the hope is that rates will start to come down. There are a lot of shorter terms being set up right now. 3 years is a very popular term. The 1-year rate's a little expensive, but 3 years seems to be a reduced rate which secures against increases until 2027. If somebody is able to tolerate some fluctuations in their interest rate and maybe some changes to their payment throughout their term, then the variable is not a bad way to go. That allows a client to lock in to the fixed rate when they're ready and when they're comfortable. When you have a closed variable mortgage, you can lock in without having to requalify. There's no cost to lock in, and it allows you to take that control back and lock in when you're comfortable and you feel like the rates are, maybe as low as they might potentially go. You still want to make sure that you're comfortable with some fluctuations in payment, because when you have a variable rate mortgage, then that payment can change on you. So.
Yeah, and nothing's certain. I mean, there's obviously a lot of people think that rates are going to come down, but I think rates are tied to inflation and how things go there. And if there's anything we've learned in the last couple of years, is that nobody can predict the future. So it could go either way. So it's obviously up to your risk tolerance level. So one thing I've heard lately is that people should look into taking on a mortgage from a non-traditional lender. So someone that's not one of your big 6 banks, purely for the idea that if rates do come down, the mortgage penalty that you can break is going to be cheaper from a non-traditional lender than what it would be if you're with a big bank, and it may be doable to break your mortgage and then refinance into something a better rate. Is that something that makes sense in your opinion? Obviously it could be case by case, but what do you think about that?
It really is case by case. So different lenders do calculate penalties differently. What your mortgage professional should be doing is helping you estimate what your penalty is going to be if you did want to get out of that mortgage, and then seeing how much interest you're going to be saving with that new rate and term. If you're saving the amount of penalty in your interest and then some, then yeah, it might make sense. If you're not, then it doesn't make sense. Even if the going interest rate is significantly lower than the rate that you're paying, it may not always be the best move to break that mortgage to get that lower rate. And again, coming back to understanding what your terms and conditions are in your mortgage, some mortgages you're not able to break in order to secure that better interest rate. So you really need to understand if that's an option for you. But lean on your mortgage professional to help you determine if it makes sense to make that change, or if it makes sense to wait until you're actually at maturity and then, investigate different options.
Yeah, I think it all comes down to just when you're going to get a new mortgage, it's not all about the interest rate. You want to look at what your penalty is going to be if you do need to break it down the road, and it is cheaper with non-traditional lenders to break it. And then of course your terms, can you pay down 20% extra a year? Can you do double payments? There's so many things that are almost equally as important as the actual interest rate you're paying. I feel like I see in the news, like almost as like every 2-3 years, there's a news story about how someone has this massive penalty they have to pay to break their mortgage. Last one was actually a real estate agent in Toronto, which was kind of comical, but it just, people don't know about it, and then it catches them off guard when they have to, when they need to break their mortgage and there's this big payment. So it's something to be aware of. Finally, for people out there that they just can't afford any more of a monthly payment on their mortgage, like if it's coming up for renewal, like it needs to stay the same, what strategies is there to keep that payment what it is now, if there is anything at all?
Most lenders will allow an individual to increase their amortization so that their payment can be a little bit less for them. And also, if somebody is struggling with their payments, or they're coming up for renewal and they're, worried about what that new payment is going to be, reach out to the brokers, reach out to your professional and see what other options are available. You may not be stuck. You might think that you're stuck, but there may be a different solution available for you that will fit better with your monthly budget and help your cash flow, and not necessarily have to be stuck where you currently are. There could be a better option for you out there.
Okay, thanks for watching. And Tina, thanks so much for joining me. If you need a mortgage professional, please reach out to Tina. I'm gonna drop her contact information below. It's Tina Robbins, Mortgage Dominion Lenders.
Dominion Lending.
All right, perfect. And I'm Tim Matthews, Realtor with the Mark and Tim Real Estate Team from Century 21 in Studio Realty.